You must be wondering, why am I in this somber background? You must be wondering, what is in store for this episode? Now, there are more uncertainties than ever before. Nobody thought that Donald Trump would win the US presidential election. Nobody thought that Britain would exit the EU. So while there are more uncertainties going into 2017, what is certain is that US economic policies, China's growth, geopolitics, commodity prices will play a part in affecting the market sentiment. So, will we see light at the end of the tunnel?
At this point of time, the world has gone through a few years of slower growth. We believe that that trend has not been reversed. Just because that Donald Trump has been elected into office, it's too early to tell whether he can actually reverse the course of the growth for the world.
Let's say, for example, Trump already imposed a 40% tariff on China imports. Then China will suffer. When China suffers, we will suffer.
But the real question is that going to be a path of hikes that are going to continue into 2016? With a tightening labor market, I would see more interest rate increases into 2017. The consensus is 2. However, if the government is on top of that going to put in a fiscal stimulus, then you could easily see 4 interest rate increases.
But theoretically, if it's just based on fundamental, I would love to see the oil settling between 50 to 60. Nothing beyond 60.
But we like the idea of the One Belt, One Road initiative taken by China. And we think that it can do tremendous good for the region in terms of the infrastructure growth.
Despite the high household debt, most analysts are still confident that the domestic economy will continue to have some growth. It is the external factors such as Malaysian exports and global oil prices that many say will affect the economy and the ringgit.
Our outlook for Malaysia is actually pretty solid. We still believe that 4+% growth over the next 5 years is going to be possible. And a lot of that is going to be driven by increased skills of the labor force, making workers more used to using these new technologies and making their businesses more productive, making them more accountable for higher productivity and faster growth of their businesses.
What I expect this to happen, like for example, recovery of consumer spending, recovery of corporate earnings, and kind of also potentially, because 2017 and 2018 will be an election year, there will be election spendings on this, and coupled with oil price.
So until we see a clear uptrend again in the oil price, then we might not see a reversal of this trend of our currency is in favor again, because our government's positions budget remain in deficits compared to in the previous cycle in the 90s that we were in surpluses.
It depends not just on the Fed, it depends on how is Europe going to react. Do we get more divergence in monetary policy between Europe and the United States, or is Europe also going to tighten? So if the whole environment is going to tighten, it means that we'll see more capital outflows to the US and to Europe potentially, and that obviously is going to push more downward pressure on the ringgit, and that will have to lead to reactions of the central bank. But it's hard to say right now, but if you ask me, is that the risk that we're looking at? Absolutely.
Let's say there is actually more news flow talk about whitening of deficits or weakening of ringgit, or there's continued outflow of, let's say, foreign investors here by selling down certain, let's say, huge bonds here. There will be a very influential to the performance CI, because anything of this happen, it will have a very negative implication to the sentiment here, and people will just hold back.
As your things get cheaper, there should be more tourists coming. As your currency cheaper, you should export more. As you get cheaper, that means you're becoming more competitive for more jobs to be found here, right? That's why FDI has to flow in and create jobs. So if we are not seeing all this, that means there's something wrong with it. with a trend. That means currency is telling you a story, but it is not giving you the effects that it should be seen.